According to CFRA Chief Investment Strategist Sam Stovall, investors would be wise to buckle up for more downside. Stovall believes the economy will suffer a bear market with a recession. Stovall recently stated that bear markets with recessions have ended up being deeper and lasting longer than those without a recession, with the average decline being 35%. So Stovall thinks we'll probably end up seeing this bear market bottom around 3,200. Stovall's prediction would mean a further drop of more than 10% in the S&P 500, and if he's correct, that would represent about a 33% drop from the January 3rd, 2022 record high. This would also be roughly in line with the long-term averages seen during a recession called out by Stovall. To be sure, the market volatility is supportive of Stovall's bearish analysis, as we certainly are in an underwater bear market. We have rising fears over the path of interest rates, a volatile foreign exchange, and slow economic growth. The Dow Jones Industrial Average, the Nasdaq Composite, and the S&P 500 are all down by double-digit percentages year to date. At the same time, we see stunning declines in many household tech names. But most impressive is the monster move in the 10-year yield from just under 2.6% about 2 months ago to now nearly 4%. This move will likely cause significant damage to the economy, and caution is the theme. However, keep in mind that just like when oil went negative, and you remember that, millions will be made from these low values. Two charts today, beginning with the volatility index, or the fear gauge, and the symbol in the upper left you can see is $VIX using stockcharts.com. Now, again, this large dish that goes all the way down here and is recovering on the way up. But remember, the VIX is opposite of the markets. So when the VIX goes up, the markets go down. Now, right now, we're at 32.6, and as you can see, we're reaching that, say, 35.0 area where a lot of these moves, this move here, and this move here, all topped out. So we'll have to watch that when we get up to this level. If we do, look for a topping in the VIX, which would mean a bottom in the indexes. So let's now take a look at our charts. And sticking with the weekly theme, we're now looking at the 2-year weekly chart on the spiders, the SPY, and as you can see here at 363.38, this low is now testing this previous low. We've gone slightly below that, and we might continue a little bit lower, but I think we're now going to be perhaps in the early stages of a recovery. Is it going to be the final bottom, the final test? Only time will tell. But let's look at the other oscillators. Volume is not really telling us too much, but the MAC once again does. We had this bottom here. Now we have this hop up through this point here. It's rolling over. We're going to head on down. There is just a minor separation between the fast line and the slow line, but I would look at this, hopefully a recovery in this area here, probably no lower than this recovery here in June and July. And if that's true, then this does have the signs of a potential bottom in the market. But it's a little bit premature. We need to see how this evolves. Moving on down here into the histogram, you can see that this level here is still, say, less than half of the points that we reached here and here. So we need to stay above that -5 mark, but we have a little bit of time to go. I'd say a week or two at least. Moving on down here into the price rate of change. This is an odd one. I'm not sure what to make from that. We definitely have improvement here, but I'm not sure if that perhaps is a calculation error by the computer. But let's go move on here into the RSI. We're at a moderate weak 32.07, but you can see here an attempt at another bottom here, and if it does make a bottom at this level, then we will have definite improvement going all the way back there a few months. So let's watch that one. That might be the first oscillator giving us the heads up. Here in stochastics, pretty much the same thing as the MAC. We're heading on down. There's a bit larger separation between the slow line there and the fast line here. We'll probably get down to that 20 or below, that oversold territory, but I don't think that really means too much because the Williams is already down there. It's at a very negative 96.46. So that's pretty steep on the downside. We need this Williams to move up and out of this oversold territory, and that probably would be our second oscillator if it does move out, giving us a sign of a potential bottom for maybe another rebound. Moving on up to the price chart, one last look. So let's just see if we do get a bottom and basing here, hopefully above the 350 level, and then we'll see where that goes. But right now, only time will tell. And for today, that's ChewDog Charts. Thank you.